there's definitely a very big positive bias towards the banks, both large caps and a little bit less in the regionals. And I don't think earnings really surprised anybody who had NIMs kind of remained under pressure because of the rate cutting cycle that hopefully we're coming out of. And then the biggest banks with strong capital markets operations have shown better results in FICC, better results in banking. And that's kind of been driving the dynamic, and it's generally what people have expected. So I don't think any big surprises in earnings so
All right,
far.
so big surprises, though, are the gap forming right now between those large money center universal banks and the investment banks versus some of these smaller and mid-cap banks out there. If you take a look at regionals, so to speak, they are underperforming some of their large cap peers. Is that a dynamic that continues in 2020?
Yeah, so we have an interesting call right now is that a lot of the dynamics that have benefited the big banks are going to start to slow a little bit. You've had a rate cutting cycle, which has boosted capital markets activity. You've had a Fed that's been very accommodative on the balance sheet side. So hopefully the Fed gets their balance sheet stable sometime in the second quarter. So we feel that if the economy remains strong and the consumer remains strong, that the regional banks are due for a little bit of a catch-up trade as NIMs stabilize. You've seen earnings estimates have stopped going down. So we think that big 10% gap in the fourth quarter will be closed a little bit by the regionals.
All right, so I want to call your attention right now to what we're showing viewers right here, which is a chart of the Invesco KBW Bank Index, which is a larger cap bank ETF, versus the Invesco KBW Regional Bank ETF.
Right.
It's doubled the performance, the large ones over the small ones, on an index basis. That particular move there, is it a mean reversion trade that happens there? So you do expect these regional banks to then play catch up and then maybe even exceed the large banks?
Sure. Well, I mean, historically, they've been a lot tighter, right? So I think the dynamic in play right now is like what I mentioned, that the rate cutting cycle has really hurt the banks. So it's hurt the regional banks, especially because they're more NII dependent. So our call is that if the economy remains strong and folks generally feel good about the financials and the banks overall, that the regional banks, it's time for them to have a little bit of a day in the sun.
If it is their day in the sun, are there certain regional banks or certain segments of the geography that are better than others?
Sure. I mean, our analysts generally like the higher quality banks that we feel where street estimates are too low. A bank that we like is Western Alliance Bancorp. We like Hancock Whitney, are two of our best ideas for 2020. So, we're trying to steer investors toward the higher quality regional banks because we feel that the regional bank space in general is cheap. So, it's not like a lot of these regional banks are combed over. We think there's a lot of good opportunities for outperformance in the coming year.